Hey traders, ever see the leaderboard and wonder how guys are swinging 50K or 150K accounts with bankrolls as small as a Chipotle lunch? That's the prop firm hustle. Pay a small fee, pass their Ninja Warrior challenge, and you're trading with real size. Sounds sweet, right? But here's the harsh truth. Most traders never make it past the challenges. The odds stacked against you. Only 1% make it to the top. Ever feel like picking a prop firm is like rolling the dice? One wrong choice, and boom. You're stuck with rules that don't fit your style, or worse, denied payouts. Don't worry, I'll show you how to avoid those traps and pick the firm that actually works for you. Be real, how many times have you blown a challenge? Not because the market was crazy, but because you messed up your own trading plan. Happens to all of us. Stick with me till the end, and I'll show you how to trade smarter, not harder, so you stop donating your account back to the firm. Welcome to the world of prop firms. This is where discipline meets opportunity, and if you learn the rules, the payouts are waiting.
All right, quick refresher for anyone new. Futures are just standardized contracts. Basically, you're betting on what the market's going to do. NASDAQ, S&P, oil, gold, even Bitcoin now. Most of us focus on NQ, NASDAQ futures, and ES, S&P futures. And if you don't want to get wrecked sizing too big, you start on micros, MNQ and MES. They only move $2 or $5 a tick, so you can trade without sweating through your shirt every time the candle twitches. And the best part? These markets are open almost 24 hours a day. Liquidity's solid. No waiting around for stock market open like a 9-to-5 job.
Imagine this. Let's say you go long NQ. Market moves 100 points in your favor. That's a smooth 2K in the pocket from just one contract. Flip it short. Same rules. But here's the twist. Margin lets you control those contracts for a tiny percentage of their value. You don't need a whale-sized account. But don't get greedy. The market gives and the market destroys. Leverage is like strapping nitrous onto a shopping cart. Sure, you can rock it to double your account, but get sloppy and you'll wrap that cart around a tree. Play smart, manage risk, avoid full-blown degenerate mode.
All right, so what exactly is a prop firm? Think of it like this. You've only got 5K in your personal account, right? Not enough to really scale. A prop firm steps in and says, hey, prove to us you can trade, and we'll hand you a 50K, 100K, even 150K account. The catch? You gotta pass their evaluation challenge first. That means following their house rules, things like drawdown limits, consistency checks, and scaling plans. If you can stick to the rules and grow the account, here's the kicker. You keep 80 to 90% of the profits. Bottom line, prop firms let you trade big without risking all your own money. That's why more and more traders are jumping in. Here's why traders are jumping on prop firms instead of grinding away with just their own tiny accounts. With a traditional account, maybe you're trading 5K. Every trade feels like it's make or break, and blowing up means your own savings take the hit. Compare that to a prop firm account. Now you're working with serious firepower, 50K, 100K, even 150K, without putting your personal stash on the line. You trade the firm's capital, keep risk off your own savings, and if you play by the rules, you keep 80 to 90% of the profits. Pretty sweet deal, right? But remember, there's always a catch: strict rules. You've got to follow every risk limit, consistency rule, and payout policy down to the letter. Slip up, and you're out. End of the day, prop trading is all about more capital, less personal risk. That's why smart traders go prop.
Let's get real for a second. Prop firms aren't doing all this out of the goodness of their hearts. There's a business model here, and it's built on fees. First, they charge challenge fees just for your shot at getting funded. Pass the initial test? Some tack on activation fees before you're let loose with real capital. Even after that, payout caps can limit how much you pull out early on. All these fees and restrictions stack up, so the firm profits whether you win or lose. Know where the money flows before you sign up, and you'll stay one step ahead. Doesn't matter if you're with TopStep, Buonox, or TradeFi, knowing the rules is what makes or breaks you. Pass the eval and keep that funded account, or blow it and start over. Today we're breaking down the big three that trip up most traders: trailing drawdown, profit-to-drawdown ratio, and consistency rules. Master these and you've got a real shot at staying funded long-term.
Let's break down the two main drawdown rules. Trailing drawdown is like a shadow chasing your account. Every time you make money, it moves up. Sounds good, but it squeezes your cushion. One slip intraday and boom, account gone. That's why firms like Bulinox and TradeFi feel ruthless. End of day drawdown? Way more chill. It only checks where you close the day, not every tick. You can dip, recover, and still be safe if you finish above the line. TopStep runs this style, and swing traders love the breathing room. Bottom line? Trailing is strict. EOD gives you flexibility. Profit-to-drawdown ratio shows how tough a challenge is. For example, a $3,000 profit target with a $1,500 drawdown is a 2-to-1 ratio. You must make twice what you can lose. That's tough. A 1-to-1 ratio is much easier. TopStep offers $3,000 target and $2,000 drawdown, 1.5-to-1, a balanced setup. Bulinox is looser at 1.2-to-1 with $2,500 drawdown, making it easier. TradeFi matches TopStep's 1.5-to-1, but with stricter trailing rules. Bottom line, lower ratio means easier challenge. Always check ratio and drawdown type before joining.
Consistency rules are key in prop trading, but vary by firm. Top step. During evaluation, no single trade can be more than half your profit target. Example, max $1,500 on $3,000 goal. After funding, this rule drops. Bulinox, you must hit your profit across at least 5 days. Funded accounts limit your best day to 40% of total profits. TradeFi, no eval rule, but funded traders must keep their biggest day under 35% of total profits. In short, these rules stop one big win from passing you. They want steady, repeatable profits. Know each firm's rule before you trade. When picking a prop firm, your trading style needs to match their rules and payout setup. Here's a quick rundown of 5 popular futures prop firms and what stands out. TopStep is great for beginners with its simple rules and staged funding. You can withdraw 50% of profits, up to $5,000 a time, on express accounts, then move to a live account for more flexibility if you're steady and consistent. Apex Trader funding lures traders with big discounts and low fees. But watch out, consistency rules are strict, and many have faced payout hurdles for missing details like enough trading days or even profit distribution. MyFunded Futures focuses on flexibility and fast payouts with a tiered system. Withdrawal limits grow as your track record does. Weekly payouts and no daily loss limits make it solid for traders wanting to scale up fast with balanced rules. Bulinox rewards steady, disciplined trading with minimum trading days and firm rules. It's less suited for aggressive scalpers, but great for those with a slow and steady mindset. TradeFi is all about options, instant funding, a range of account types, and up to 90% payouts. It appeals to traders wanting variety and a setup that matches their exact goals. Bottom line, each firm fits a different approach, so compare rules and reviews at rankpropfirms.com before diving in. Picking the right fit is one of the most important choices you'll make, so do the homework up front and trade with confidence. All right, here's the part most traders love: firm comparisons. Once you understand the rules, the next big question is, which firm actually fits your trading style? Head over to rankpropfirms.com and open the comparison page. It's like Tinder for prop firms. Filter by account size: $25,000, $50,000, $100,000, or higher if you're feeling spicy. Click Select a Comparison Type to quickly sort for things like scaling, consistency, contract size limit, payouts, or more. The table reshuffles in seconds. And when you see something you like, just smash Get Funded. You go straight to checkout with the promo code baked in. No more 3-hour PDF deep dives. I've done the homework, so you don't have to. Speaking of codes, the promo codes page is where it gets fun. You'll see discounts anywhere from 15% to 90% off on Apex, Bulinox, TradeFi, MyFunded Futures, and more. Just hit Show Code, and you're saving money faster than you can blow a micro-contract scalp. Forget Googling random coupons. RankPropFirms.com is where real traders shop for funding. And the one bookmark that actually makes you money, instead of wasting it.
Mindset is everything in trading. Charts and strategies don't matter if your head's not right. Traders often blow accounts not from bad plans, but from revenge trading or chasing wins. That's self-sabotage. A winning mindset means sticking to your plan and staying disciplined. It's like oxygen for your trading career. Without it, you won't last. Subscribe for more videos on strategies and trader mindset traits to help you trade smarter and stay consistent. Here's the truth about trading few talk about. Everyone sees the flashy top 10%, the cool strategies and perfect entries, but that's just the tip of the iceberg. But the part that actually sinks ships, that's the other 90% below the surface. Mindset, patience, and risk management. It's what makes you respect your stop loss or FOMO in on a risky candle. You don't blow up from bad setups. You blow up when you break your own rules. So stop chasing the next magic strategy. Focus on your psychology, discipline, and risk rules. That's where your real edge lives. Let me give you one last analogy. Casino mindset versus trader mindset. Casino traders come in chasing luck, thinking one big win will solve everything. That's how revenge trading and doubling down on losers starts, and usually ends with blown accounts and frustration. Real traders know success is about steady, consistent gains, not swinging for the fences. It's sticking to risk management, being patient, and letting small wins add up over time. Excitement and adrenaline don't keep you funded. Discipline and regular withdrawals do. So ask yourself, are you in it for the thrill or building real, sustainable results?
Your next step? Head over to rankpropfirms.com. Check out the side-by-side comparison and grab those promo codes before you jump into your next challenge. And if this video saved you some time or money, do me a favor, hit that like button, subscribe, and turn on the bell so you don't miss what's coming next.